is it our understanding that you could actually get physical delivery? Because, most of us are wondering how much gold that thing even has in the GLD. I mean, can they really have any realistic expectation of delivery of physical from the GLD?
We know that the big bullion banks do hold significant quantities of physical bullion. That there are quote-unquote audits that take place with these bullion ETFs. Where the potential scam originates is the fact that you have, HSBC on the gold side and JP Morgan on the silver side, both having two enormous positions which they claim to be backing. The custodian agreements for GLD and SLV, and then their own short positions in gold and silver. And of course, the remarkable coincidence with regard to these positions is that the size of GLD and the size of the gold short position remain remarkably consistent month after month, year after year, and the size of the silver short position and the size of SLV remain remarkably consistent month after month, year after year, almost as if every time somebody buys another unit of SLV, that JP Morgan is immediately taking that ounce of silver, running to the COMEX and shorting it. And, so there is bullion coming into this fund because, in fact, the investors who pony up their money are providing the funding to buy the bullion in the first place. The question, of course, is whether there's enough bullion to back the short positions and the custodian agreements. And, of course, in that respect, I'm unequivocal in that I don't believe this to be the case. So basically, what China would be doing by using the vehicle that exists within GLD for unit holders to request redemptions and take delivery of actual bullion is that they would simply be creating a much greater degree of leverage in this potential scam that's being operated by HSBC.
Paul Farrell wrote that the Fed dictator Bernanke needs to be toppled. Now, this language, this meme that is now out there that you're using, that I'm using, that Paul Farrell is using, that Zero Hedge is using, dictator, terrorists, I think the enemy has truly been identified and the world knows. And that's why the Chinese are in the markets buying physical, because what Bernanke is doing and what the Fed is doing is absolute insanity. And Farrell writes, quote, Fed boss Ben Bernanke is the most dangerous human on earth, far more dangerous than Hosni Mubarak ever was. Bernanke rules a monetary dictatorship that will trigger the coming third meltdown of the 21st century.
Something that's always outraged me is the excesses in rhetoric that you see from these individuals. The use by them of labels like terrorist and radical and, various inflammatory terms designed to create emotional responses from us, whether it's fear or anger or whatever. And so, for me, it's somewhat delicious irony to then be able to, latch on to some of the labels that they've been using and apply them towards themselves.
It's just evident now that, they use Orwellian language, ignorance is truth, slavery is freedom, and it's pretty easily proven. I mean, it's pretty easy to see once you're awake to what's going on that the real terrorists are the ones that are blaming everybody else. I just wanted to ask you one last thing here about hyperinflation and inflation that we're going to be seeing in the States. Now, China's basically been importing our inflation via the dollar, and as a result of Bernanke's actions, commodities are reaching multi-decade highs. And yesterday it was reported that according to the Chinese National Bureau of Statistics, Chinese food prices have increased by 4.6% in 10 days. That's 400% annualized inflation. That's hyperinflation, Jeff.
Well, what many people didn't notice in the United States only about 5 or 6 months ago was Walmart announcing 1 month across-the-board price increases averaging 6%. And, when the supposed, low-cost retailer in the U.S. Announces price increases that work out to an annualized inflation rate of over 70%, that's certainly a warning sign of its own. So, there are definitely the signals here. And, of course, even today, in the doctored stats that were released, there was the announcement that U.S. import prices rose at, much faster pace than was predicted. And, of course, that's part of the data that's hard for the government to hide, because while they can doctor domestic inflation numbers, it's very hard to fudge the import data.
Yeah, and I wanted to leave folks with this, and maybe you can weigh in on this too, as it relates to purchasing physical silver and or physical gold. I always like to point out to people when they ask me, well, if silver goes to $1,000 an ounce, who could possibly buy it? Where will the buyers come from? And I always like to point out that palladium, which trades freely and isn't subject to 100-to-1 paper manipulation by the big banks like silver and gold, palladium's gone from $100 to $850 in fairly short order. And there are plenty of buyers out there willing to take delivery of palladium. And the same is true for gold at $1,400 an ounce. So it's really a mindset, isn't it, Jeff? I mean, at $1,000 silver, there'll be plenty of buyers.
Well, and as I wrote a couple months back, when I started talking about this gradual progression from inflation to quote unquote hyperinflation, at some point the nominal numbers stop to have any real meaning, because it's just a matter of steadily adding more zeros, and the connection between the piece of paper and any sort of tangible value becomes more and more ephemeral.
Yeah, and it's interesting too, because higher prices bring out more buying interest. It brings out buyers.
In the silver market, the dynamic which very few people have been discussing is that silver jewelry will undoubtedly benefit from the appreciation in the price of silver, and indirectly from the appreciation in the price of gold. As the price of gold increases, many gold jewelry buyers are going to be pushed out of that market. Conversely, as the price of silver jewelry increases, that jewelry will still remain affordable, but will actually acquire increasing status as a valuable asset. When silver was $10 an ounce, who wanted to own silver jewelry? But if silver's $100 an ounce, then all of a sudden you're going to find a lot more ladies quite happy to adorn themselves in silver.
Right. Well, Jeff, we're going to post suicide bombers in the gold market below and more info. So, Jeff, always a pleasure to speak with you, and we really appreciate your time.
Thanks again, Sean.
All right, till next time.
You bet.
Bye-bye.
Bye-bye.
Hey guys, thanks for watching, and stay tuned, because I've just completed my interview with Bix Weir, whose Road to Ruta theory is nothing short of compelling. Now, if you're not familiar with Bix and his amazing work, you can check him out at roadtoruta.com. Bix and I touched on many compelling issues, not the least of which is $6,000 an ounce silver. You won't want to miss it. I'll post it no later than this Saturday. And, as always, guys, thanks for watching. Good night.